Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso and I'm super excited to be with you today to talk about governmental accounting when it comes to the CARES Act. So as many of you are aware, the AICPA has issued a TQA addressing non-governmental GAAP and what the appropriate treatment is for the CARES Act, whether that be PPP or the Coronavirus Relief Fund. What is the accounting that would be appropriate for non-governmental entities? However, it didn't address governmental entities. And so today, June 11th, the GASB has issued a proposal. It is an exposure draft that's going to be a technical bulletin. It is not going to be a GASB standard, but it is going to provide guidance in the form of Q&A on the appropriate treatment. So it is going out for public comment so that we can give it feedback. So again, it is going to be a proposed technical bulletin trying to address this funding from March of 2020 that was passed by Congress, right? There's several different funds within the CARES Act. There's the Coronavirus Relief Fund, or CRF. There's the Provider Relief Fund, and then there's the Paycheck Protection Program, or PPP, that seems to be changing every single day. It seems like we cannot keep up with what's going on there. It seems like every time I turn on the news or check out LinkedIn, something has changed in that area. So it's done in the form of a Q&A, trying to do this. Now, I have paraphrased all of these questions and answers. Otherwise, they would be monster blocks on here. But you can always refer to the original guidance if you want to read the entire question. So the first questions are the resources received from the Coronavirus Relief Fund, or CRF, established under the CARES Act, subject to eligibility requirements or to purpose restrictions. And then the second question is, when would those resources be recognized as revenue? So again, they have certain requirements here. So it tells us that resources should be recognized as liabilities until the eligibility requirements are met, including the incurrence of eligible expenditures. When the eligibility requirements are met, then they would be able to recognize revenue. And that is not too different from what we are hearing on the commercial side. Nonprofits would be recognizing the same thing until they actually meet those eligibility requirements. Should a provision that addresses a government's loss of revenue be considered an eligibility requirement for revenue recognition? And they confirmed yes. You would recognize that again, as the revenue should be recognized when they meet the eligibility requirement. So even if it's a loss of revenue element. As I mentioned, it seems like PPP changes every single day. And so a great question: if amendments to the CARES Act are passed and signed into law after a government statement of net position, but prior to the issuance of the financial statements, should the government consider those amendments as the basis for recognition in the financial statements for the reporting period? And this will be very interesting because, as you're probably aware, many have a 5/31 year end, and we have seen some changes in June. So this is a very important question. The answer is no. It would be deemed to be a non-recognized subsequent event. You would use what was in effect for the financial statement date, even though there was a subsequent event. For PPP, the Paycheck Protection Program, some not-for-profit entities who follow governmental GAAP would be subject or would be eligible to receive this. So if a governmental entity received a forgivable loan, so we've been hearing about this on the commercial side as well, and the government entity determines the loan will be forgiven in the subsequent reporting period, should the governmental entity continue to report the loan as a liability at the end of the reporting period? So if you know that you're going to get you're going to have this forgiven, right? What is the appropriate accounting here? And again, you're going to report it as a liability until you are legally released from the debt, and then you would report an inflow of resources. So when you are reporting revenue, should the CARES Act resources from the Provider Relief Fund, the Higher Education Emergency Relief Fund, the CARES Act Airport Grant, the Formula Grant for Rural Areas and Urbanized Area Formula Grants, if you're doing this for a business type activity or an enterprise, right? So for those airports is a great example. They have to do a classified statement. So it's operating versus non-operating. So the question is, are these non-operating? The answer is yes, except, because you have to have an exception for every rule, the Provider Relief Fund's uninsurance program, because that is payment for care, it would deem to be an operating revenue. Another very popular question, not so much on the commercial side because we don't have extraordinary or special items, but in the government world, we do have extraordinary and special items. And so the question is, are these extraordinary for accounting purposes? And the answer is No. The answer they gave, though, made me very sad. It said it is reasonable to expect the coronavirus disease to reoccur in the foreseeable future. I certainly hope not, and I do hope that we certainly get a vaccine or a cure, because kind of over the coronavirus at this point. So again, this is an exposure draft. Comments are due June 25th of 2020. So if you have any issues with any of these suggested answers, I would recommend that you let GASB know. If you have any questions that weren't addressed, I would also let them know there. With that, I want to thank you for joining me this week on the blog, and I hope to see you on a future blog. Have a great day, guys. Bye-bye.